Hello everyone and welcome to this week's show report, your go-to source for the latest updates on the real estate market in the greater Toronto, Hamilton, Niagara, Durham, and Northumberland regions and beyond. I'm your host, Robert Yanachak from the Shoreview Real Estate team, powered by New Street. Let's kick things off this week by diving right into our most recent market report that we just released and discuss some of the recent changes in the overall market. Let's start by talking about the average home price in the greater Toronto region. According to the latest stats from TREB, we didn't see much movement in the average price in June. Prices were down about 1% from the previous month, but the good news is compared to last year, prices were actually up about 3%. Not a lot of people compare it to the last month, but they are up from 3%. That's a positive sign for homeowners and sellers. When it comes to sales though, we did see a dip of about 17% from the previous month. However, compared to last year, again, sales are still up by a solid 16%. This means that despite the slight slowdown, the market actually remains active and resilient compared to last year this time of year. An interesting fact is that the Greater Toronto area is actually experiencing a 104% list to sales price ratio. What does that mean? It means that more homes are actually selling above the asking price rather than below it, leaning towards a bit more of a seller's market in the Greater Toronto area. Now, let's shift our focus to Hamilton and Niagara. These areas followed a similar trend in comparison to the GTA last month with minimal price movement, but guess what? The average price in these regions actually increased by 1 to 2% from the previous month. So month over month, they're actually up. Sales, on the other hand, were down in these areas compared to previous months, similarly to the GTA, but still higher than last year. So despite the slight dip, the overall market remains better than it did in 2022 in all three markets. Let's talk about the median days on market across all the regions. On average, homes are selling within approximately 10 to 20 days. London has the lowest days on market with homes selling in about 10 days. On the other end of the spectrum, the GTA has the highest days on market, taking about 19 days to sell. This means that with the right pricing strategy and a solid marketing campaign, you can expect your home to sell in about half a month in today's market. Now, let's turn our attention to the Durham region. It's been quite an outlier over the past year, showing little volatility in prices compared to other regions. The average price of a home in Durham is currently hovering just below 1 million. And the exciting part is that prices have actually increased by 1% from last month and 3% from last year. Durham has been a really interesting market for last year. It's really remained strong with little volatility on the prices and prices really remaining strong. The market in Durham is continuously on the rise. If you're considering buying or selling in Durham, keep in mind that there's a record low of only 1.4 months of inventory available. Additionally, the list to sales price ratio stands at an impressive 107%. It's definitely a competitive market in Durham. Now, let's talk about inventory levels across different markets. So the GTA and Hamilton currently have about 2 months of inventory available. However, markets like Niagara and Northumberland, as you go a little further out from Toronto, have a slightly higher inventory of 3 to 3.5 months. So if you're looking for more options, maybe some better opportunities, these areas might be worth exploring before they catch up to the overall market. Remember, if you want to dive deeper into the stats for specific home types, like detached and condos in cities like Mississauga, Oakville, Burlington, Ajax, Pickering, Toronto West, Brighton, and more, make sure to check out our full show report. It's going to be posted on all our social media channels. Make sure to follow us there, and I'll also post it at the end of this video so you can go through it and pause and take a look at the different markets. Now, let's shift gears and just talk about the overall interior real estate market, what's been going on. We've got some important updates. As you probably heard, the Bank of Canada recently raised the overnight target rate to 5%, up another 0.25%. Tired of saying it. These constant rate increases have had an impact on the housing market and homeowners and the overall economy, obviously. We've already seen a decrease in inflation of 1% month over month for May. And here's the good news. If the inflation rate continues to stabilize, I predict that we might see a pause in prime rate increases and even a reduction by the end of 2023 or early 2024. So things could start looking more favorable for borrowers and homeowners in the near future. Keep in mind though that these prime rate increases only affect variable rate mortgages and lending products. So interestingly, in recent months, fixed rates have been more attractive than variable rates for those that are looking to renew their mortgages or attain new mortgages. So most homeowners have actually opted for or planning to go with fixed rate mortgages, which are not impacted by the recent prime rate increases. Considering that, just take these last two increases with a grain of salt as they don't impact all financing options, and as you can see in some markets, prices are still gradually, very minimally going up or not being impacted much, even though we've seen these increases. Now, let's talk about the ongoing issue of housing supply and demand in Ontario. Still a challenging situation. It's expected to get even worse and more demanding in coming years due to the high immigration rates. To make matters worse, construction starts in Canada have actually been declining recently. In May 2023, the trend showed a decrease in housing starts compared to April. Vancouver was down 45%, Toronto was down 28%, Montreal was down 35%. So just overall new construction is slightly down from last year. With sales down and only 1 to 3 months of supply in most markets in southwestern Ontario, the market is still considered a seller's market. We haven't seen a significant increase in listings so far this summer, which directly impacts sales and the absorption of homes in the market. It's possible that the accumulating effects of 10 interest rate hikes may start taking a toll on homeowners in the coming months, resulting in more people transitioning or selling. And this could have an impact on buyer demand and prices and all that. But with high buyer demand and significant pressures on housing, the market should remain fairly balanced. And that's my honest opinion on it. That's a wrap for this week's show report. Thank you so much for tuning in. I hope that you found this information helpful. My name is Robert Yanachak from the Shoreview Real Estate Team, powered by New Street. Remember, lots of changes, lots of opportunities. Stay informed. Message me, message the team. Any real estate questions you have. Till next time, all the best.